Morning traders, Paul here with GammaEdge. Today is Thursday, the 1st of June. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, bearish across the board. Short-term models for the 0DT traders, 1 to 3 day swing traders. We've been whipsawing back and forth. We had a couple days of sustained down, which were good for trend following on these shorter time frames. We may get a bounce, we may not. We're really balanced, and you'll see that coming up here in the charts. But continuation day down on both the cumulative tick and something we call the railroad track pattern. You'll see that on the next slide. Long-term market model remains bearish. CT, the cumulative tick, is below what we call the historical ribbon. And as long as that is the case, the overall pressure will be down within the market. Transitions, we closed at 4180, down from the 4205 that we had back-to-back last couple of days. The lower transition is 4175. It's unchanged from yesterday, and the upper transition is 4200. Why this is important? First of all, both of them are unchanged. So the structure is not moving around. The market is really at a standoff in terms of overall movement. And when the market is at a standoff, directionality is not assured. So just be aware of that. Shorten your time frames. Don't get out over your ski tips. Play opportunistically. You should not be looking at multi-week trades right now, at least not in our view. You should be looking at very, very short-dated trades because there is no dominant trend at the time. The SPX combo, 3900 is the left post, goal post, 4300 is the right goal post. That is unchanged. We still believe there's little fear from 3900 towards the 4200 strike. There's not a lot of put dominance that's going in, and you'll see that on the next to last slide. The SPX combo, which is the AM and the PM settled complex, we are still delta dominant on the call side above us, which means there's a lot of out-of-the-money speculation above us. That's good. That's good for a bull. And below us, in the money, call dominant below. Now, we are starting to see a few cracks in the ice, and we'll talk about that here coming up. But in general, we're still very strong. With still looking, we think the market is looking to move higher, potentially all the way up to 4,300. Doesn't mean we're getting there. The particular zone that we're looking at for weakness is this 4185 to 4215. Remember, lower transition is 4175, and the upper transition is 4200. So this weakness that we're seeing is overlapping the transition zone. The call speculators really need to step up, and they need to rebuild that 4200, 4205, 10, and 15 in order to not let the crack in the ice get any bigger. For the 0DT folks, we have a lot of them in the Discord. The upside potential is there, and you'll see that here in a couple slides. A very, very clean transition between 4200 and 4195. Unchanged relative to yesterday. So again, the structures are not moving, and when the structures don't move, there is no dominant trend. The upper charm strike is 4200. You can see when we go to this chart that we could push higher than that. Any targeting throughout the day would pull us. There's a lot of out of the money calls that are coming off today, and those are up to and towards 4225 as a dominant level, and then we start tapering off above 4225 towards 4250. But any movement upward could easily pull us upward, and be aware of that. Lower charm strike is 4125. That's really low. That's far below transition. But note, as we move down through 4175, and remember we closed at 4180, as we start moving down through 4175, we'll start picking up steam as we get to 4165. And then if we lose 4165, there's a series of large put-dominated gammas. And so the charm flows that we'll have today will actually reverse as we move down through, and those out-of-the-money puts become in the money. That'll flip charm flows, and that could accelerate a downward move. So watch the Value SPXP, which is our own symbol for the PM settled complex, within the Discord, and watch for targeting above and below the key levels. If you have any questions on that, make sure you ask one of the mods or one of the admins. The market model, I've marked some of the transition points. We did a thread in Twitter the other day on this, and we've got a Substack here at the bottom. Would urge everyone to go read it. The ribbon is in a downward trend. It reversed last week, and you can see that it's sustaining that downward move. The instantaneous CT, which is this white line that you see here, closed lower than yesterday. Did have a midday reversal, as you can see. And I tend to like those for the bulls, actually. I like to see after the euro close, we step in and start our buying. This is not predictive. We don't know which direction the market's going to go, and nor do you. We do have a sense of momentum, and right now I'd say the bears are slightly favored in this momentum, but we'll see. So study this chart. Again, if you have any questions, make sure you come into the Discord and ask. Taking a look at Gamma, this is the PM structure for the SPX. Net positive overall. You can see that up here in the upper right-hand corner. That means we're a call-dominated structure, but it's weaker. We had a significant amount of calls closed yesterday, as well as puts being opened, and that has shifted the Gamma balance down just a little bit. Still very, very much put-dominated. You can see that here in the put-call ratio of 71% to 28%. Now, this is very different than the overall SPX combo. But just be aware that PCR, put-call ratio, and GEX ratio are not the same thing. And the GEX ratios right now are very balanced with a slight favor to the call side. So when we see that, we have charm flows that are going to be supportive. We have a lot of out of the money that you can see down here below the yellow line of these puts. That's going to push us upward. And then you've got all these calls that are out of the money above us. That's going to be kind of the counterbalance, but the net right now is a slight downward pressure with the positive Gamma that we're seeing here. So charm flows are going to be slightly downward. Gamma is slightly up from the trader's perspective. So just be aware of how that could play out. Transition, very flat. You can see very ill-defined between the 4175 zone as well as up to 4200. So a lot of zeros in here, a lot of low pressure zone in here. Would not be surprised if we parked in this area tonight. Zero DTE, first thing that should jump off the page at you is that it's an incredibly clear and well-defined transition zone. When we see that, the market is anticipating one move or the other. Think of it just as two forces really pushing against each other. And so there is no ambiguity here. The 4195, 4200 is really the line in the sand for a move, whether the bulls will be in control or the bears will be in control. So a couple things, if you're new to this, you need to pay attention to. So below the yellow line, we have a dominance of out of the money puts on the Gamma side. Also on the charm side. So when you have an out of the money put on a zero DTE, the charm flows are positive. They are supportive. And so this is, unless we get a targeting is what we call it, unless we see a lot of people opening puts, which is, inputting or increasing the delta, negative deltas into the complex, all the red below us will be supportive. And if you don't understand how that charm flow works, make sure you come into the Discord and ask. To the north, you can see there's a lot of calls that are sitting there. And those are out of the money calls that'll work against us. And that's why the transition zones are really, really important. The takeaway here, though, is as that yellow line moves up or down, puts become in the money, and that could pull us down if that line drops, right? And that's due to the targeting. You can see that the 4165 line really becomes where the mass, where the change occurs in the overall system. And we have a marker for that within the Discord. It's called COTMP. It's the cumulative out of the money puts. It's where they start becoming in the money. So you want to pay attention to that. If we get targeting below that yellow line where folks are opening puts, it is very, very possible to pull us down, and we could lose that COTMP level, that monetization or reversal level. To the upside, just the exact opposite. As we move up, what happens is those calls, which are out of the money above us, now become in the money, and charm flows will start going positive for that, and that could accelerate us to the upside. And you can see once we get above that 4225 zone, it's just kind of keep adding as we go. So watch for any targeting above that 42.25 to pull us upward today. So just be mindful that yesterday we had that reversal that I was talking about. We could see another one. All right. So after the euro close, we tend to see some sort of reversals, afternoon buying, etc. And I would be watchful of that, especially with inflows coming in from mutual funds and everything being the 1st of June. 1 DTE, again, transition's kind of weak. You can see this down here at 41.05. We've been talking about this here for a few days. It goes away as of tomorrow, end of the week. The structure is slightly negative in terms of an overall net gamma. You can see that it's very mixed in the deltas, and what this basically means is chop. We don't know which direction this thing's going to go. What we do look for are the areas of low exposure. So 4100, 4105, 4110 would be one area of low exposure, exactly where it is right now within transition. So that 4175 all the way up to 4200 would be another area of low transition or low exposure. And then right up here at 4210, 4215 would be another parking zone. So if you have the opportunity to pick up a zero cost broken wing or a butterfly or something like that for those areas, you might want to do that. We're on the constant lookout for that, and more often than not, we're able to leverage and capitalize on that. Balance of week, this is today and tomorrow combined. You can see, again, very clear transition structure. Don't really need to beat this into the ground. You can see what's happening there. Looking into next week, we're seeing a little bit more weakness creep in. So the overhead structure still shows the out of the money calls. That's the green deltas that you see there. A little bit of weakness just above us. We will note the call open interest. We said this yesterday also. Call open interest for next week has dropped to 4,200, down from 4,300. That's important. So near-term upside, everyone's targeting the 4,200 and the 4,250s in terms of short-dated gamma for next week. But the big picture here is basically saying upside could be limited for next week. It's also saying with all those in the money, out of the money puts, the red deltas below the yellow line, that folks are banking on some weakness next week. So you may want to be thinking about that also. And if you can pick up some low-cost insurance to the downside, it might be prudent. The overall complex, SPX combo complex, which is the AM and the PMs. If you've been tracking this, first of all, we had a significant amount of outflows yesterday. In calls as well, at long calls and introduction of long puts. So just be aware that the complex did move a little more bearish yesterday. The overall structure, though, is still very, very bullish. We have out-of-the-money call speculators in control to the upside, and clearly below the yellow line, you can look at the deltas, and you can see as far as the eye can see down below us that the in-the-money calls are definitely dominant also. Why that's important is that you do see some cracks in the ice that start right at that 4190, which is still within transition, and pushes us all the way up towards that 4215. Out of the money, call speculators need to step up, and they need to really start rebuilding that area. They need to open some short-dated contracts there to really force the deltas up and force the gamma up. We'll see. If they don't step up, this could be the first crack in the ice to the downside, and we'll just have to play it accordingly. Taking a look at the landscape view here, really unchanged. The transition structure is still, showing this little bimodal thing here. We're still in the belief system that we're not short-dated, well-hedged to the downside. This structure that you see here, where it's kind of bell-shaped around 3,900, is not usual. Not for somebody who is thinking about the complex dropping. So with that in mind, and knowing that we're a significant distance up from that, we're almost 300 points up from that, or 200 points, 250, whatever it is. I think it's prudent to be looking down here into this area to see if you can pick up some downside convexity at a low cost. You might want to do that. To the upside, 4,300 clearly is in everyone's crosshairs. 4,400 is still very much there. We're sitting down in this 4180, 4170 zone, and yet the 4,400 line is still dominant over the 4,200 line. What does that tell you? Well, it tells us that there's a lot of folks who are short dated up towards that 4,400. They're not banking we're going to get to 4,400, but they're banking on the convexity afforded by gamma as we move up. So there is still a lot of call speculation to the upside. It has not vaporized. It is not imbalanced to the upside. And so a lot of folks are still looking north and not really looking south. And so we think that's the opportunity actually to add some low-cost protection to the downside. So with that, I will bid you farewell. If you have any interest in coming and kicking the tires, we urge you to do so. You can do so. 14-day free trial, no risk to you. We don't charge your credit card until the 15th day. Come to GammaEdge.us. In the upper right-hand corner is a pricing tab. Click that and come on in. Got a great group of traders, great group of folks who are very helpful. The mods, the admins, etc. It's a great environment. Twitter, follow us, please. We've got over 6,000 followers and growing, and would want to thank you for that, and just keep adding as you feel you can. And then on YouTube here, of course, two things. Thumbs up if you like today's commentary. It gives me immediate feedback that I'm providing something that you find actionable. And subscribe, so next time that we post something, you get notified that it's there. So with that, I bid you farewell. Have a great Thursday, and hope to see everybody in the Discord. Thanks.